What usually happens when you see a consolidation, a range on your charts? What usually happens? I always want to jumpstart your thought process. What usually happens? Nothing happens. You don't know what to do. You are trying to find the way where to take a trade. You don't understand when the movement would continue up and down, whatever. You just don't know what to do. And this is exactly what I'm going to do today to change it, to fix it. I'll explain to you what the balance, what you usually call a consolidation or a range, what the balance is. All right? I'll deconstruct it part by part, segment by segment. Okay? Now, without any bullshit, let's get started. All right. Let me zoom in. Okay. Let's draw a bit. What do we see here? Any balance always start with an impulse. Please remember it. We can classify any range or a consolidation as a balance if there is no impulse preceding it. This is rule number 1. Okay, we have an impulse. Then the first step of any balance is a fix. A fix. What is a fix? Fix happens when institutional traders close their positions. They close their positions and we see a fix, we see counter movement, counter reaction. Then the second step of the balance is an inertial trade. Inertial trade. Inertial trade is a trade taken in the same direction as the previous movement. And this is the end of the first segment of the balance. Okay? Fix and an inertial trade allow us to define top and bottom boundaries of a potential balance. Why potential? Let me explain. The second crucial factor for any consolidation or a range, when we can classify any consolidation or a range as a balance, the second crucial factor is a responsive activity. It is what it is. An institutional trader responds to the market movement. We usually see a responsive activity above the fixed zone or below an inertial trade. Here we have a responsive activities. And this will be a second segment of the balance. Okay? Two responsive activities. We can have any balance can have one or two responsive activities, but of course not more than two responsive activities because this is just impossible. Okay, and one responsive activity is also enough. We already can classify a balance as a balance when we at least see one responsive activity. So once again, two main factors to classify a balance as a balance is first an impulse. We need to see an impulse before the formation of the first segment, and then the second crucial factor to classify any consolidation or range as a balance is a responsive activity, at least one. Okay, after the second, what happens after the second segment? The third segment, which is the most important segment of any balance, because this segment allows us to understand where the movement will continue, up or down. Okay. And the third segment can take different forms. Here I depicted several types of the third segment on purpose, so you can see and I hope understand all of them. So here, what we see here. This is an initial fixed reinforcement. Fixed reinforcement. So the price, the auction reinforces an initial fix and the price moves down. The second is middle level reinforcement. Okay, middle level reinforcement. The price reinforces the middle level, then push through rotations. This is my favorite one because when I see push through rotations, which usually can happen just above the border or a bit below, I already know that in 80% of cases it will be a good movement. And the next step of the balance is repositioning, a new impulse, okay? Straight, direct movement. And the next step of the balance, of any balance, and the market structure is an initial fill. Institutional traders initially fill their positions, and that's it. Then we see usually a little pullback. It can be It can go higher. Usually this is a little pullback. Then we see a formation of retest. The price, the auction accumulates some volume here. And then we see move continuation. MC is a move continuation. All right. Understanding just this balance structure, which is actually the market structure, moves you 2 steps ahead any other retail trader. Okay, now I'm going to give you some examples. Let's start from the weekly auction example, just like that. Okay, let's do it like this. You already saw how I deconstructed the balance. Try to deconstruct it yourself. Just pause the video and try to identify where is the fix and inertial trade, everything, responsive activities. I know you do nothing. All right. First of all, everything starts with an impulse. All right. Here we have an initial fill here from the previous structure. I'm showing to you different types of balances, complicated, so you start to understand the market structure more deeper and deeper with each lesson, okay? And here we had a retest. Then what happens next? Next, we see a fix formation, all right? Here we see a fix. What is the second step? What is the second step of any balance? Remember? No, you don't. The second step of the balance is an inertial trade. An inertial trade is a trade taken in the same direction of the previous moment. All right? What we see next? Then, and this is the end. This is the end of the first segment of the balance. Now, the second segment of the balance. What do we see here? A reaction, a response from a seller. All right? And this will be a seller's responsive activity. What happens next? Then we see responsive activity from the opposite side, which will be what? Buyer's responsive activity. What happens next? Next, we see push through rotations. All right? And then we see an initial fill here. Initial fill. What happened next? Then we see retest and the move continuation. All right? And that's it. This is the weekly balance. We just deconstructed weekly balance. All right? This was the end. This was actually the end of the second segment of the balance. So here we have, once again, we have 3 segments of the balance. The first segment is fix. All right? Fix. Then we see an inertial trade. And this is the end of the first segment of the balance. Then we see a responsive activity. When we already saw a responsive activity, seller's responsive activity, we can classify this movement as a balance. How? We have 2 crucial factors here met. An impulse, an initial impulse, then a responsive activity, seller's responsive activity. And when it was formed, would we confirm this was a balance? All right? Yes, I'm repeating all these things many, many times because I want you to understand this as deeply as possible. Like I do, actually. All right, let's move on. Let's move on to the next example. Now, daily auction. What do we have here? We have an impulse. What happens after? What happens after an impulse? What is the first step of the balance? Can you remember? Fix. What is the second step? What is the second step? Come on. I'm talking to you and I am asking you, what is the second step? An inertial trade. What happens next? And this is the end of the first segment of the balance, of any balance. We had an impulse, we had a fix, we had an inertial trade. What happens next? What's this? What's this rotation? Can you tell me? This is a responsive activity, complex responsive activity. Complex responsive activity. What is the next step? What is the next step? Bias responsive activity. Bias responsive activity. What happens next? And this is actually the end of the second segment. What happens next? Here we see a third segment, another type of the third segment, which is responsive activity reinforcement. Responsive activity reinforcement. Okay? Responsive activity reinforcement. This is what we have here. Now, what do we need next? Next, we need to support. We need to support the buyer. How could it happen? We see another type of the third segment here, which is middle level reinforcement. Middle level reinforcement, okay? Then what happens next? We see push through rotations. Push through rotations. Here, then another spike, and then repositioning. All right, here we see repositioning. Let me mark repositioning. Then we see an initial fill, and then we see retest, and move continuation. Move continuation. That's it. Once again, everything starts with an impulse. We can't classify anything as a balance if there is no impulse preceding it. What happens next? The first step is a fix. Buyers fixed their positions, they closed them. Then we see an inertial trade. An inertial trade is a trade taken in the same direction. Then we see a responsive activity, sales responsive activity, huge rotation and responsive activity. Then we see buyers activation, buyers responsive activity. And this is the end of the second segment. Then we see responsive activity reinforcement, which is the third segment of the balance. Then we see a middle level reinforcement. Then we see push through rotations, another buy spike. Then, finally, repositioning happens. Okay? Repositioning, initial fill, retest, move continuation. That's it. And when you just imagine when you can catch this moment, when you can catch all this moment, won't you be happy? Won't your trading experience improve? What do you think? Yes, I'm excited to talk about this because this is the only market structure concept that allowed me to skyrocket my trading experience. Before this, before understanding this, I was here and there, here and there, here and there, here and there, green days, red days, green days, red days, red, green, 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 and now 80% green. Okay, now let's get to another example. 1 hour example. 1 hour example. Let's do it like this. Can you try to deconstruct it? Try to deconstruct it right now. Don't be lazy. What do you see? Where is impulse, fix, and inertial trade? Try to do it. Don't be lazy, please. You are lazy, I know. Okay. Let me do it myself. We have an impulse. An impulse preceding a fix. What do we have next? Next, we see fix. What happens next? An inertial trade. Inertial trade. Then what happens next? Sales responsive activity. Sales responsive activity. Okay. Then what happens next? We didn't have bias responsive activity here. As I told you previously, it's not necessary for the balance to have two responsive activity. One is enough. All right, here we can call it a initial fill reinforcement or responsive activity reinforcement. Let it be responsive activity reinforcement here. All right. Now what happens next? Then this is the third segment. What happens next? Then we also have push through rotations here. Then we see repositioning. Then we see initial fill, then we see retest and move continue. Okay, once again, fix, we have an impulse, then we have a fix. Should I repeat what all these concepts mean? I don't think so already. We have a fix and initial trade, and this is the end of the first segment. Then what we have next? A responsive activity. It's not necessary for any balance to have, once again, it's not necessary for any balance to have two responsive activities. One responsive activity is more than enough. Okay, this is the end. When the responsive activity was fully formed, can we confirm this was a balance? A balance. What we wait for next? The third segment, which can take different forms. In this case, we had responsive activity reinforcement and push through rotations. Push through rotations. I didn't mark it. Push through rotations. Then we have repositioning, which happens here. And then we see an initial fill, retest, and move continuation. This is it. This is it. Let me show you one more example. All right, 15-minute auction. Would you deconstruct, would you? I know you wouldn't. But don't be lazy. All right. Trading is not about laziness. It's about passion. Okay, we have an impulse. Then we see an initial fill. What happens next? Then we see retest, move, continuation, and then we see a fix, a new structure. Okay, we have a fix because the sellers fixed their positions, they just closed their positions. Then we see what is the second step of the balance. Tell me. You should remember already an inertial trade. Then what happens next? This is the end of the first segment of the balance. What is the second segment? Responsive activity. Then what happens next? Here we also don't see a bias responsive activity, which is absolutely okay. Here we have a middle level, and the third segment here is middle level reinforcement. Let's actually mark the end of the second segment. Then what happens next? What is the next step after the middle level reinforcement? Of course, repositioning. We see a new impulse, which is repositioning. Then we see this little initial fill. Then what is the next step? Tell me quickly. Retest. The next step is retest. What is the next step after the retest? Tell me. Move continuation. All right? Move continuation. Once again, we have an impulse. This was some previous structure. Then we see an initial fill, retest, move continuation. Then we see a fix formation. Sellers close their positions. Then we see an initial trade. This is when retail traders join the train, which happens in the same direction as the previous movement. And here the first segment of the balance has ended. Okay, what happens next? We see a responsive activity, sellers responsive activity. Here we have a complex responsive activity which was built through this spikes here and there through these rotations. Then the second segment has ended. Then we see a middle level reinforcement. Then what happens next? We see repositioning, then we see an initial fill, then we see retest and move continuation. Okay, and that's it. And this is not head and shoulders, as technicians would usually call it, head and shoulders, like a shampoo. This is not a head and shoulders. All right, and this is it. This is all I wanted to give you in this lesson. Now I want to give you a home task. Yes, if you are not lazy, if day trading futures is your true passion, then go and do it. Just go and do it. Start your thought process. Okay, home task. First, find as many balances as possible. Use weekly time frame, daily time frame, hourly time frame, and 15-minute time frame. Deconstruct each balance like I did. Try to identify a fix, an inertial trade, a responsive activity, third segment. Remember all those types of third segments I gave you. Repositioning, which is a new impulse, an initial, fill, retest, move continuation. All these steps. Try to identify all these steps, all right? Then, next, take screenshots of the balances, all the balances, and save them in a separate folder. This will help you in the future. Next, try to understand what exactly made the price to reverse or continue the movement. I'm sorry, I forgot to tell you about the types of balances. There are actually, it's easy. There are two types of balances. We have local balances and reversal balances. Local balance, which happened here on the weekly auction, local balance. It supports the previous movements. The auction accumulates some volume, which supports the move continuation. The same here, daily auction. The auction accumulates some volume through balance and then continues the movement. And on the hourly chart, on the hourly time frame, we have a reversal because the price takes another direction. The auction, in this case hourly auction, gathered some volume and reversed. And here 15-minute time frame, we have the same. We have a balance and the price reverses. Okay? This is it. This is it for this lesson. This is it. See you in the next video.